Hi everyone, I'm Anthony Molinaro.
And I'm Timothy Jagger, and we're coming to you from GO8 112 to 124 Middleborough Road in Blackburn South. So one of our new listings, which is quite exciting. So this is going to be a fast wrap on market, consumer sentiment, Metro Melbourne and regional.
Cool. So I'll start with the home price facts. Metro home value up 0.9% month on month, and the median units and houses combined now sits at 818,975 for Metro Melbourne. Houses actually jumped $20,000 for the month of October. Regional Victoria values, well, they're up 0.8% month on month, with the median now at 602,646 for units and houses.
Now, Rental Pulse, the national vacancy rate sits at 1.4%, and national rents rose 0.5% for the month, the fastest since May 2024. Annual rent growth for Melbourne units are at 2.2% per year and houses 1.6% for Melbourne. And regional Victoria rents look set to re-accelerate over the coming year.
Now the market sentiment, sellers can proceed with good confidence, particularly whilst choice is still constrained. Total stock remains a negative 9.4% year on year, according to realestate.com.au. Now for buyers, expect strong competition on A-grade stock. Auction clearance rates still remain strong for the month of October, which was at 67%. Rental providers, well, the re-accelerating of rents will help keep yields for investors. Melbourne vacancy sits higher than peers, but still sub that 2% mark. And renters, well, they face competition. Opens are getting well served, and suburbs may find relief in adjacent pockets just beyond those hotspots. Building costs, well, the Cordell construction cost report for September quarter rose by 0.6%, taking build costs to a 31% higher margin over the last 5 years. Margins pressures for builders and developers is constraining activity and housing supply.
Now over to lending. The RBA reported lending for investors is rising at the fastest pace since June 2015. Further acceleration could see a tightening in lending to investors. Now, interest rates and inflation. The US just dropped their interest rate again. However, the same won't be happening here, particularly with inflation rising to 3.2%. The August RBA cut will be the last we see in 2025, and no rate cuts are likely in 2026 if inflation doesn't swiftly move back within the 2 to 3% target zone. Now, thanks for taking the time to watch this month's market wrap. Remember, the information provided is of a general nature, and you should always seek independent legal, financial, taxation and other advice in relation to your unique circumstances.
Now don't forget, for free reports on sales and rental data, as well as the annual access report, please click on the links in the description to below this video. Thanks again for watching, and until next month, bye for now.